All right, good morning, everyone. It is 8:34 in the morning of the 9th of December, 2021, and this is my pre-market strategy session. There are some interesting things happening in the small caps this morning. Large caps are a little bit slow. There's only one large cap that fits my criteria that's on my scanner this morning. The small caps a little bit more interesting, and we'll see how it goes today. Okay, so first up is ENSC, next up is IINN, and then after that is SYTA. But before I get to those three, I want to go over a couple of other trades that I have witnessed here recently. A new pattern that's developing here that I've noticed. So small caps recently have not, and this has been happening for quite some time now. Here's CPIX. It popped up on the 30th of November, and on this day, it traded 207.688 million shares. Now, when something that has total shares outstanding of 14.85 million, and I think the float is closer to 10 million, and it trades 207 million shares. I'm anticipating this thing having moved in multiples of tens as far as dollars go, like $10, $20, $30 moves on something that has volume of 207 million. And for just kind of a frame of reference, the SPY is the most traded ETF in the market. It's a proxy for the S&P 500. And on big moves like what we've seen here in recent history, I mean, the SPY is doing 148 million shares traded here on the 30th of November. On the 1st of December, 132 million. 2nd of December, 127 million. 3rd of December, 137 million. That's on a stock price that's north of $450 a share for the ETF. So when you see volume, or when I see volume on a small cap, that has, a really small number of shares, there's something going on. And what I'm thinking it is that there were probably a lot of people who lost a lot of money trying to trade small cap momentum, and they probably collectively complained. I don't think anybody organized their complaints, but I think that at some point the number of voices crying out that they had lost money and on stocks that went from $2, closed $2 the previous day and hit a high. I mean, I've seen them hit as high as 120 the next day, and then there's somebody inevitably that buys, at 120, and then it goes back down to, 60, 40, 20, so on and so on. Through the next few weeks, it's back down to $2 a share again. And there's somebody holding, at $120 a share. And the stock will most likely, if it ever sees $120 a share again, it'll be years, decades perhaps even. So it looks to me like Wall Street, and I say Wall Street, but I don't know, whether it's the brokers or the clearing houses, or the exchanges and so on and so on. I don't know, but anytime small cap momentum starts popping up in the way that it used to, it just gets a beat down. And then a few days later, it'll do this kind of bottoming pattern right here and then run up past, and make a move to what I would expect to see on the first day of trading, given, the small cap momentum strategy. ISPC, here's another sort of example of that. Here it traded 100 million, almost 100 million shares on the day that its news came out that it won a government contract. And now here it is, 1, 2, 3, 4, 5 days later, and it's decided to start popping up, right? So on ENSC and on IINN this morning, I wouldn't expect much from these stocks for their moves. if in the regular hours, the pre-market hours seem to behave according to momentum rules. But regular hours, when I guess, there are people who are trading, if you're trading pre-market or post-market, you know what you're doing. You know what you're doing. If you're in pre-market and post-market doesn't have circuit breakers or anything. So I guess they're leaving the pre-market and post-market alone and allowing it to be traded sort of traditionally, like you would think you would see a momentum trade being played. But then regular hours, it just turns into noise. And here's an example of it turning into noise here. ISPC, we'll look at this on the 10-minute. It looks somewhat smooth on the 10-minute even. Here it is. The first day it popped up was the 30th of November, I think was the day that I traded it. Let's see. Yeah. So the news came out on the 30th of December for let me check. Let me make sure here. 22nd of November. Okay. So here we are on the 22nd of November. And you can see this thing, it's just noisy. This is the 10-minute. And I'll put it on the 1-minute here in a second. It's just noise. I moved that by accident. A little bit better here on the 26th, a lot better here on the 29th, but just really noisy. Let's go to the 1-minute real quick. You'll get a really good idea of what's going on here on the 1-minute. So I like to use the 1-minute setups for momentum trades. For the 23rd, here it is. Look at this. It's just noisy. It's just noisy. There's no discernible movement, other than it hitting a price and being rejected. But there are no long entries, certainly. And this is the first day, it got the news. And then the next day after it got the news, just spotty, noisy, low volume. The day after that, spotty, no volume, boring. But then all of a sudden, here we go on, let's see, what is this, the 26th, and it's like the stock decides to wake up, and it puts in a range from $15 to $23. Here it is on the 29th. Puts in a range from $14 to $28. I made money on this day. I think I lost money previous to this day. So when it comes to ENSC today and IINN, I wouldn't expect much during regular hours, but then give it a few days, it might be able to come back to something. And that's why I have these two on watch today, because it might give a trade setup. It might still, even though they're really tough, it may still give a trade setup. Here's SYTA today. So now SYTA here, you can see it popped up here on December the 7th and traded 160 million shares. In the range on this one, it was at least somewhat respectable. There was a range here of $3 roughly. Let's see, put in a low of 428 and a high of 720. So almost a $3 range. Somewhat respectable, but it looks to me, well, so it opened. Let's see, it opened here in the 428, went as high as 725, and then dropped back down. Let's look at this on, that was the 7th of December. We'll look at that on the 1-minute and see how sketchy. So that's actually not too bad. There's actually a trade here. And so if you didn't buy the open, which, some people do that. I don't like to buy the open. Some people do. But here you can see the first pullback. And then once it popped up over the first pullback, it gave you an entry here. Now, you would have had to have suffered through a little bit of a drop right here, but that's the proper entry right there above 547. And then it started moving up, into 637 and 650 roughly. So it did give a setup on the 1-minute that day, and actually continued here. This isn't really clean movement. This isn't really clean. This is still really choppy and tough trading right here. Then it gets in the afternoon and it drops, which is really quite normal, really, for small cap momentum. Well, okay, so today it's popping up pre-market. Let's see, it's up 21.73% today. So it's on watch. Perhaps this thing will decide to put in that pattern that we've been seeing lately where, it opens up this first day and then comes down and then decides to start swooping back up. Here it is right now, pre-market, kind of in this tail candle. Sellers are in control right here. So if it pops up over 720 right here, then it'll definitely be worth paying attention to. In fact, I'll probably not even pay attention to it. I'll probably, let me take that off for the day. Actually, let me delete that. This is my daily chart right here. And if I put the alarm on the daily chart on Trading View is the name of this package, it won't alarm me until like the next day or something. So, okay. So here we have the high, previous high on December the 7th. If it can break through that high, then there are interested buyers. As a matter of fact, look at this kind of topping tail candle right here. We'll put an alarm on that one too. That might be a good spot to trade it. And here we are back here on the 27th of October. Let me open that up and put an alarm on that too. If it makes it to 968, then I've already started to trade it down here over 720. So 968 isn't exactly necessary, but it's there. So here on the 27th of October, it traded 147 million shares. This actually had a decent range here on this day. There's, I don't know if I traded this or not, but a $6.85 move from, let's see, a low of 283 to a high of $9.68. So definitely put in a move, but you can see, that it pops up and fails. It's not like this thing is going to pop up and continue running, which is really quite common for small cap momentum. Okay, so let's get rid of these guys here. But take one last look here at the daily here. You can see kind of how the daily's a lot less organized. CPIX, yeah, kind of doing the same thing. All right, let's get out of there. So, and then, oops, we go to the large cap, the only large cap. Oh, actually, a couple more large caps popped up, but the volume is really low. So the only large cap that was really interesting to me this morning when I came into the office is Restoration Hardware. Restoration Hardware is putting in quite a considerable move here. It was up 50 bucks. Right now, let's see, it's up about 45 bucks. Yeah, last night it was up as high as $75 a share. So put a Fibonacci on it. I imagine that there's going to be, there was this recent rather significant dip you can see here in Restoration Hardware down here to the 539 range. What's the chart saying right now? The chart is saying there's some support. If price gets as low as this area today, 600 even, there's some support. And actually, let me tweak that just a tad. Oops. Let's go to the very bottom of that right there. So, on the last earnings report here, you can kind of see, I don't like to use previous earning report performance as an example, really, because it's not, I haven't found it to be that reliable, but there is support right in here in the $600 range, somewhere in there. Let's see, 609, right here, yeah, roughly 600 bucks. Let's see if there's a Fibonacci that falls on that. Fibonacci back up. Well, so the 38.2 Fibonacci falls at roughly the same spot. 597.29 is the support that I see on the chart, and it coincides with the 38.2 price right here, 597.09. So somewhere around, somewhere around that area, it looks like there's support. So what the plan is, though, to trade this is, so if it comes down And I've got to keep it, actually, I need to keep the Fibonacci moving. I'll move the Fibonacci. So when I got in this morning, it was, I got in at about 8 o'clock. And so I put this Fibonacci on at 8:19. But if we move down here, where it is right now, the plan is to trade this. If it dips down below its open, and then pops back through its open again, that's a buy. If it dips down below it's the 75 and pops up again past the 75, then that's a buy. And these are only scalp trades. I'm only looking for a 1% to 1.5% move to take profits. And then the other strategy is to average in between the 61.8 and the 50% level. But I think I'm going to leave that 61.8 to 50 level alone, because if it starts going down that low, if it starts going down below the 61.8 and into the into this area right here, it's probably going to go lower, and I'll look for the 597 level for an entry, and then just manage the risk really carefully. I won't let it get more than 1% away from me before cutting losses. If it continues to go down in the southern direction, I imagine that there will be a bounce though. Either the opening, the 75% level, or this level right around in here, around 600, 597, whatever. There will be a bounce for this stock. Okay, so let's see the broader market. Actually, let's check something here real quick. Yeah, ENN's doing okay. And something else that I've been doing as pre-market here, I've been putting my Fibonacci on so that here's the previous day's low, or here's the previous day's close, 2.68. And for these small cap momentums plays, I then put, I just doubled the previous day's close. And it seems to be doing a pretty good job of forecasting the movement on these small cap momentum plays. I'm going to do something here real quick. All right. Sorry about that. I need to just check out my level 2 windows real quick to see what's going on with the price action. So, and again, here on ENSC, I did the same thing. Let's see, let's click on the Fibonacci. 294 is the previous close, 588 is the 100% level. And you can see, here it does a pretty decent job of showing the support and resistance levels. Okay, so broader market this morning. The SPY is opening up a little bit lower this morning, 0.33% lower than its previous close. I mean, there's this looks totally normal to me. There was a little bit, if you want to call this a correction even, I would call this normal motion in most cases. Let's see, from top to bottom, it put in a 5% move, in, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days. I mean, that's, there's a little bit of volatility there, pretty normal. Hedge Eye basically forecast that this area down in here would be the spot to make some purchases. Turned out really well. So here we are. What's it doing? It looks like it's in this range again here that occurred between, let's say that's the 5th of November to the 24th of November. So we're hanging around up here again. Probably came back up to break into new highs. Really, I mean it's it's the time of the season where everybody's trying to catch up to their benchmarks. Everybody's trying to make things happen. All the hedge funds and money managers and portfolio managers and so forth kind of need this year-end performance, and so here it is. They're making it happen, and it's a good time to be part of the trader in the market. The same thing is true. January and February come along, and everybody's going to set up their portfolios for the year 2022 for what they at least think is going to happen for the first half of the year. And so it's another good spot to be a trader is, January and February, when everybody's kind of jockeying for position on, their setups for the year. So the VIX, the VIX popped up a little bit this morning here. I think, here's the gap, the top of the gap from 2020, February 2020. And it's my guess that the VIX is probably, after, making a rather significant down move here, it's going to take a breath or two and then continue down. That's my guess. And in that motion, I believe, that it'll probably hit the top of the gap and test it. And then after a couple days of bumping into that and not being able to get past it, buyers will step in again and say, okay, let's make this happen. So I think next week is going to be a big up week. We'll see what happens. All right, Bitcoin. Bitcoin is, as of right now, it's neutral. And I say I have a bullish bias on Bitcoin because of this gigantic candle right here on this day. Let me get the volume out of the way so it's easier to see. So here you can see on this day, it plummeted past this 52,956 support and resistance level. Back here, it was resistance, blasted through it, came down, tested it, and then took off after that. So now it just dumped below, but then went straight to the 42,000 level, which is from all the way over here. That support level is from the 8th of January 2021, so almost a year ago, and it's come back into that level. And in one day, it tested that level and then closed, closed about $7,000 higher from that support level. Huge bounce. That doesn't mean that it won't, here it plunged and then came, is coming up. And it is certainly possible for it to come back down again. But as Peter Resnicek, if anybody follows Shadow Trader and has learned the market profile system he uses, if Bitcoin comes back down to this close to the 42,000 level and then starts moving away again, he calls that an H pattern, and he calls it, that stands for hell for the shorts, he calls it. So if Bitcoin comes back down here, finds support somewhere north of 42,000, which I imagine it will, because it was such strong support here on this day, it's going to be hell for the shorts. It'll be time to go long. All right. So yeah, that's pretty much my pre-market strategy session. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at the recap. I am out.